Silver and gold are pumping, but do charts really matter? Anyway, use the time codes below to go to your favorite part right away. But if you're watching this live, you get to enjoy everything we do here at Good Morning Stackers.
Good morning, Stackers. Oh yeah, we're feeling fine.
Including the Synchronised Slurp that you're about to hear. Grab your tasty beverage. This is Good Morning Stackers, your weekday live show all about gold, silver, bullion, economic news, and all the other stuff, including do charts really matter. It is so funky in the house here. In the first minute, we do the Synchronised Slurp. So, grab your tasty beverage. I'll pause that. Grab your tasty beverage. In the next couple of seconds, we will do the Synchronised Slurp and get into it. We do it in the first 1 minute of the show. Grab the tasty beverage. Synchronised Slurp. The rule is you have to do it audibly wherever you are in the world. It's an honor system. Here we go. Grab your tasty beverage in 3, 2, 1. What's the point? What's the point of life and the meaning of life, and do charts matter, and what's the point, people? Why do we do it? Why do we do it at all? Ladies and gentlemen, my name is Joe Main. I have worked in the bullion industry for 11 years and been a stacker for 14 years since 2010. This is my weekdaily live show. What we do here is we do some shout outs first, then we do a quick little plug, and then we talk about today's topic. We do some silver and gold and platinum analysis as well. So, and today's topic is, do charts even matter anyway? Well, I'll give you my potentially surprising opinion on that. Here we go, people. But if you're just watching this on the replay, just use the time codes, people. It's really easy. But we need to talk to and give the shout outs to the GMS family, because that's what it's all about here, creating this community, the Good Morning Stackers family. So hit the big red subscribe button to join said family, because we're the winning team. 295 subscribers now, and this is the 7th week of the show, I believe. 7 weeks, not even 2 months, and nearly 300 subscribers. We're going to be dominating the entire world by the end of this year. Repeat, GMS. CT, GMS, exciting silver day today. Yes, it is. We will talk about the silver pump and what are the sort of levels we need to keep an eye out on. Black Coal says GMS. Laurie Williams, GMS from sunny Northern Victoria, Australia. Tony, you joined us today. Tony Peterson, GMS. Laurie, keep stacking the cheap silver if you want to. Yeah, keep stacking the cheap silver. Now I'm going to say, is it Teo? Hey, in the house. I recognize your name. Have you been on the show before? Have you been on the live show before? If I served you in store before somewhere, I recognize the name. Or are you first to the show? Welcome if you're first to the show. You may have found us on the Reddit forums, so Wall Street Silver DJing Club, or you may have found us on the Gold and Silver Stackers Australia forum, or you just did a good old search. GMS says, Hazza. Speaking of, Wall Street Silver is in the house. Come on, how cool is this? Wall Street Silver, you never know, Silver DJing Club might pop his head in too. But for some reason, I don't think Wall Street Silver and Silver DJing Club are like Clark Kent and Superman. You'll never see them at the same time. Wonder why. Tony Pearson says, good morning, everyone. And also says, chart lives matter. Yes, all charts matter. Hashtag all charts matter. So what I really want to talk to you about, other than do charts matter, and of course talking about silver, gold, and platinum, the quick analysis for the day, the weather report, as I call it. I also, of course, have to mention my brand partner, which happens to be this old chestnut right here. When I say old chestnut, brand new chestnut, launched in May. My brand partner, Perth Bullion Exchange, they are releasing today, I have it on Good Word, really good word, their very first unboxing video. It's going to be all about a certain product, which I think you guys are going to be really excited about. And you like this brand in particular. Many people love this brand. You don't get to see a lot of it in Australia. So I'll leave it at that. But I know that's coming probably around sort of lunchtime-ish on the Australian East Coast kind of time, roughly. So their very first unboxing. So what you would want to do is head over to their channel, which is youtube.com/at Perth Bullion Exchange. And or you could just go to YouTube and type in Perth Bullion Exchange. You'll find the channel and just hit the big red subscribe button for them too, to join their little family that they're building as well, with the help of me, because I am working with them in terms of their social media stuff. That's what I've been doing for a very long time. So I'm teaching them the skills of how to do it themselves, and I teach other businesses how to do any kind of business. So if you want my help, come see me. I do a really good job, if I do say so myself. And they are Australia's first dealer to offer free express shipping or free shipping on all discount volumes. Buy over a certain amount, get free shipping. Never heard of in Australia. That is the plug for my brand partner. Any last shout outs? Yes, welcome Wall Street Silver. How cool is it to have Wall Street Silver on my little channel here? So cool. And Ray's in the house as well. Good morning, everyone. I'm just going to adjust this. Let me see how low I can go. I like to adjust it for the light. And you at least have to get a little bit of my very high hair in the picture. I need a haircut really, really bad. So we are going to do some silver, gold, and platinum analysis. Silver has pumped in the last 24 hours since we did our last analyses. It's it's Friday, the 7th of June. So you get one more this week, and then we'll come back next week and see where the price has gone after the market's closed. But right here, let's check out the silver pump. The respect the pump, people. Here we go. Where are we? Share the damn screen, Joe. Right there. Share that screen. Look at that pump. Here's where we were. I've got to pop you into the 4-hour time frame. Man, we just saw a beautiful pump move. Look at this. We were here at $30.30 roughly at around about this same time yesterday. This is where we were. Around about here. I did not have these Fibonacci lines drawn in, but I just drew them in from this high and this low. So the high of the $32.50 to the low, looks like it at the moment, $29.30. We can see how it did respect. Interesting how Fibonacci works after the fact. Well, everything's hindsight, but even after you post a low, how silver tends to respect, not always, but tends to respect Fibonacci levels on both short-term and incredibly long-term time frames. We're talking the monthly time frames as well. And by the way, again, we will talk about, do charts even matter? But right here, we broke above, and it was great to see. We had that $30.60 level. Look at that. So that high and that low, that intersects very well with that $30 level right here. Look at this. It's just amazing. Right here, this is after the fact as well. This low hadn't been posted yet. And then when you post this, you pop in this high and this low. Look how it respects these support and resistance levels. It's just crazy. And I have in the past, and I'll show it. I can't prove it to you because I can't go back in time and show it to you at the time. But the low of silver low of silver in the Marchish kind of area of March of 2020, we know what happened there. I'd actually had a chart drawn in before then based on Fibonacci levels, and I never thought, oh, that's a weird zero level. It probably will never go down to there, and it went down to there, down to that sort of $11, $12 mark. Anyway, I am digressing. Right here, we had the beautiful move above $30.60. We've been talking about $31. That's what I'm here about. That's what I'm here to tell you. $31, that's my final hurdle that we need to close on a monthly time frame in order to say we're in 100% in bull market. I've already been there. It's 99%. It's been 99% since we broke 26 US dollars. I've been saying that for a while. I just want to keep my 1% back until we close any month above this $31 level. Right there. Great to see us back above it. But look at this again on the Fibonacci from this high and this low. This is on the 4-hour chart. Using the tradingview.com website. Look at that. On the 4-hour, it came right up to where, what do you know? Right here. this level of $31.30, which was the and is the 61.8 level from this high and this low. And is it any kind of major area of support? There was a little bit of support there. You could call a little bit of support there, but it wasn't major support or resistance, so it's respecting the Fibonacci's right there. And what do I need to see? I just need to see it. Obviously, I want it to hold and bounce off 31 US dollars. That's it. You could call it, if you want to comfortably call it that, 30, it's so close, $30.95. It's $31. So that's what I want to see in the next few hours, in the next day or so. It could just pump straight back up to new interim all-time highs and breaking 3250. Could certainly happen. I never say either way where a price is definitely going to go. I just give my own personal, it's 50-50 or more than 50% chance, all that. But what I need to see in order to say, we're going to be making new interim all-time highs, we're going to be breaking that $32.50 and on to higher prices, is the $31 level. So I'd love to see it hold above here, or at least come no lower, support level 31, and bounce off and then continue up. The definite sign for me is the 0.786 level between this high and this low, and that's at right there at $31.80. We're probably 99% confirmed that we're going to break this double top, or it's not a double top in that case. But just for me, $31.80, because I do find the 0.786 usually the Fibonacci to be an area where you can come up to and then it fakes you out. A lot of people think that it's the 61.8, but I find the 786 right here to be a key level as well for fake outs and for dead cat bounces as well. So bear that in mind. Just got to hold above 31. Great to see. And great to see on the relative strength index on the 4-hourly time frame. Coming up to, but it's butting up against this resistance level that I've had drawn in for a little bit right there. But it's great to see that it is pumping in the right direction. It is moving higher. So we're looking positive for silver. Just need to see it hold that 31 preferably. We'll go to the daily. Just bear in mind that we sometimes do have, as I talk about those fake outs, we have found resistance on the daily at that 618 level right there. Could be a key level. Just watch for the fake out. Am I saying it's going to go in a certain direction? No, just watch out for the fake out. Watch out for the fake out right there. I'm going to keep, and I'm going to keep it for until the evidence proves otherwise. And let me be very clear, I have not said it's definitely going to this area, and I will never say something's definitely going to a certain area in a smaller time frame, like a daily time frame. But my best buy zone right now is between 28 and 26. When I put those levels in, people, do I mean, it's definitely going there? No. Do I even say that in the videos? Yes. Do I say dollar cost averaging is the best way to go? Yes. And all that. So, but I am keeping it there because I just want to see that hold above 31 on the monthly, because it's not confirmed for me that it's not confirmed that it is not a fake out, if that makes sense. So just watch for the fake out potentially. I'm not going to give a percentage chance, and I'm not definitely saying it's going there, but watch out for it. So that is great to see, though. It's really positive to see the pump back above 31. We should all be excited for our precious metals holdings. And it all depends on where you are within your cycle of buying as well. Do you dollar cost average? Best way to go. If you're waiting for a dip in the precious metals, probably not the best thing to do. You should be dollar cost averaging and don't worry about the prices, because do charts matter anyway? So that is the silver price. Let's take a look at gold. Great to see it above the $31.50 US, $31.50. So the 2,350 US dollar level. Just taking a look very quickly down here on the daily time frame, on the relative strength index, ticking up at the moment above the average, which is great to see. On the monthly time frame, we have been, it's a lovely move, but we have been in extremely overbought already. But we could certainly see a pump back up, but just bear in mind we are on the decline. Am I saying it's going down from here? No, all that sort of other stuff. But it's very positive to see that it's over 2,350 US dollars, which has been a key level of resistance and we've just broken back up, and we're at 2,375. It is still under my final hurdle for new all-time highs to come soon. For any new all-time highs for me to be confirmed in gold, it has to break and hold above $2,400. We're not there yet, so I have to use my weight of evidence to say, hey, looking positive, but just not there yet. Okay, so just bear in mind $2,400, and bear in mind we want to hold a support $2,350, breaking down below there again. Then I would suggest we'd have another test, and then 2,305 might be more likely. So great to see it in this range between 2,350 and 2,400. We're just ranging at the moment. It's not going to definitely go in one direction or the other until it makes its decision on, I'd say, at least closing on a daily time frame. That's my humble opinion, and you can tell me I'm wrong, and we're going to go to platinum. That is gold. Let's take a look at platinum. Okay, still in ho-hum territory, above $990. We saw very, very solid support here at the $990 roughly dollar area, this downtrend line. To my new subscribers overnight, very quickly, the long-term downtrend line from February of 2008 has failed to hold it on many times. We have held it so far. But, you know, time will tell. We have held this downtrend line, so it's great to see. I'm in the, let's see what happens. I will be depressed for platinum if I get down under here. I will, if we close, say, a week in particular. Under here, I'll be excited for platinum if we close above this level here. It's around about 1,035. We're just in no man's land right now. My final hurdle right there, you know it, 1,115 to 1,120 tells me we're in full-time bull market for a long time, but we haven't hit that yet. That's basically it for platinum. I usually keep that a little bit more short and sharp, but there's really nothing else to say with platinum. We're just ranging at the moment. Got to see either of those levels broken and closing above, at least on a daily, preferably a weekly time frame, to give you my new opinion on platinum. But we're still in ho-hum, whatever territory. Bear in mind on the relative strength index, we are still tracking down. That's something to keep an eye out for. That's gold and silver and platinum. That's really what you need to look out for. So, party people, let's do some more quick comments, and we are going to ask the question, do charts even matter anyway? So let's have a look. Give me your comments right now. Post a comment below now. We'll start the topic right before I read off some of these other comments. Do charts even matter? Do they really matter? And that's not me being facetious or being sarcastic. I am putting a little bit tongue-in-cheek, but that's a genuine question. And do they really even matter anyway? And I'll give you my personal opinion on that in just a second, but get your comments on that right now. Let's read out your comments. Breaking news. We just put it. Okay. Breaking news, says Wall Street Silver. We just put up a lawsuit update. Interesting. Okay. I won't get into all the back and forths about what's been going on between Wall Street Silver and the other Wall Street Silver and blah, 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 but interesting to know. Where is Ditch? Good morning. Where is... fair enough. Where is Ditch the Deep State? Tony Pearson says, I think the jump from 45 Australian dollars back to 47 Australian dollars spooked market. Could have. Spooked the market. Yes, could have. Black Coal says, though, metal pump unsustainable in the short term. Traditionally, lower prices... the Northern Hemisphere, traditionally lower prices in the Northern Hemisphere holiday period. Yeah, okay, of July, August. Okay, well, if tradition plays out, if history rhymes, then you could be correct there. Black coal, you never know. Yep, silver is at 47 Australian dollars. Bear that in mind, people. Not seeing the Wall Street update, blah, blah, blah. Laurie says, you will not see... talks about themselves. A little birdie told me... Oh, here we go. A little birdie told me a vault storage customer wants 3 ton of silver delivered to the buyer on the 12th of June as he got a tip. Ooh. Vault storage whale. I'll read your comments. Do you mean what particular vault are you talking about? So a vault storage customer. Are we talking about the Comex? A little bird and a little birdie. I want to know who this little birdie is. Tony Peterson. So wants 3 tons of silver delivered to the buyer on the 12th of June as he got a tip. Okay, very interesting. I would be very interested to see how that plays out as well. David Williams says, you'll never see a black swan event on a chart. Exactly right. That's true. You'll never see a black swan event on the chart. Correct. So I will add that. I will use the time codes. Do charts really matter anyway? Good question. Let's talk about, do charts even matter? Now, I'll just give you my straight opinion. To start with, then we'll actually look at the charts and see, well, do they matter? Do they matter? Sometimes do they not really matter in the long term? Things of thing. Here's my personal opinion, and it's going to be like, of course, Joe would say this, but it's subjective. Do charts matter? Well, matter is I always get technical, bro. Matter is the same as value. Value is subjective. Does it matter? It might matter to you. It might not matter to someone else. So matter is subjective. So I'm never going to say, yes, charts absolutely matter, or no, charts don't matter whatsoever. It depends on where you are. It depends on where you are within a buying cycle. It depends on your psychology as well. So let's take a look. We'll take a look at the silver chart again in particular, and we'll just do some more macro look at the charts. And for some people, it does matter. And some people don't really care. But we'll show you the charts again. And let's go back to... So I just gave you the answer in the start. It really is subjective, of course. But we can look at the chart to go, well, are there periods where, it could matter more than others? So let's go here. I'm going to take that off. Do I take... No. What I'll do... Well, first off, let's just go to the chart. Do charts even matter? In the long term, no. So do charts really matter in the long term? No. So what I'm going to do, let me get rid of that, and I'll just get rid of a few things. I'll get rid of all this junk right here. Do I want all of this? No, I don't want that. I don't want that. I'll get rid of you, and I'll get rid of you. That's probably good enough. Yeah, I'd say that's good enough. So here is silver on the monthly time frame, going all the way back to, let's see, we are at, on this particular index, well, we're going all the way back to, well, it goes way back quite a way, but reliable charting goes all the way back to, and you can't see it, I'll move that there so you can see it where my head's in the way, 1971. What do you know? 1970, roughly. So let's take a quick look. We have, and this is the Fibonacci drawn from the old highs of 1980 and the old lows of $3.50, a bottom in 1991 and $3.50 hit again in 1993. Can you imagine? Just again, take a step back for a second. Can you imagine buying silver back then as Mike Maloney, Robert Kiyosaki, and I think Mike Maloney was around that kind of area as well. Can you imagine buying silver at, like $4 that kind of thing? I think that's just crazy. But let's just take a look at the chart. Do charts matter? Well, what you can very clearly see here is the biggest giant cup and handle in human history, I think. I think you would all agree with that. Look at that. Cup handle right there. And we've got, again, this Fibonacci drawn in from this high and this low right here. So what we can see is, now anything before this low, anything between here and here is hindsight, because the low wasn't in yet. And look, anything until I'd say around about here, anything before then is hindsight because the chart wasn't in. And of course, you cannot, as David Williams says, you cannot account for a black swan event. So of course, Charts don't matter when there's a black swan event, but black swan events don't occur very often. They're not that often. So I do find charts do matter on a longer term time frame right here, because you can very clearly see how after this high and this low, you can see the previous areas of resistance. Now, we're not even talking Fibonacci, just for a second. The question here, the esoteric philosophical question, is do charts matter? Well, it doesn't matter about what kind of technical analysis you're using on the chart. I could even get rid of that and go, well, does this even matter? Okay. And yes, of course it does. It's very subjective. It matters to me personally. It's a subjective opinion. But for me, charts do matter. All charts matter. Hashtag all charts matter. It does matter to me because personally, again, it's completely subjective, and that's my real answer is, do charts matter? It might matter to you, might not matter to you. It's subjective. But to me, they do, because when I take a look at the old high and the old low, and I use even just simple Fibonacci or even just simple support and resistance levels, all right, that's using the chart. So charts do matter to me. You can see very clearly we had that move up to 13, 14 US dollars. You can see previous resistance became resistance again for a little bit. But even this Fibonacci levels right here have respected the Fibonacci levels on this long-term chart have been respected very, very well since posting the old high and the old low down here. You can see right here, for example, around about here, that $20, $21 area, that's actually back here. That's not a significant area of support or resistance. You actually had a peak here. And so this random 0.382 Fibonacci level from this old high and this old low is around about your $20.30 area. And back here in, what do you know? Back here in March of 2008, we closed around about your $20.30, $20.50 area. You can very easily see also, now this is the double top, so just bear this in mind. Of course, that's previous resistance, so you can't say that was, Fibonacci was predictive on that way. But this $26 level, look at this, all the way back here. All the way back here from this high and this low. You can see the halfway point, the 50% Fibonacci retracement level at $25.75 US cents. And it's, we call it roughly $26 area. All the way, that's not a key level of support or resistance on the way up back in the late 70s, early 80s to the pump to $50. That's not a key support level at all. It hasn't been key support at all, not even here. It didn't reach resistance here at $24.30 roughly. So it didn't take, it took until over here where we had the double top, and then you can see very clearly support around about that $26 level, very clearly on just right near that Fibonacci level, 26, 26, 26, 26. And then you can see right here very clearly a support level of the Fibonacci around about that $13.70, $13.80 level. Again, that is previous resistance. Right there, it did respect it. Back here, back to previous resistance, which happened to line up with the Fibonacci. But again, even if you're just doing support and resistance, if you don't use any other technical analysis other than support and resistance, charts do matter. Because you can see. What does support and resistance mean? It is just psychology. So charts are mapping psychology. That's pretty much it. Now, you may disagree. You could say, no, it's really mapping the manipulation of the silver price and all prices since they have been controlled by a computer since Nixon's time. You could say that. You could put that in there. Do I necessarily agree with that? No. Is it an interesting theory? Yes, it is. But I think charts are psychology. So charts are important because charts are a map of psychology. So you can see a previous area of resistance, which means, what does an area of resistance mean? It means that the selling psychology is more in play. There are more sellers than buyers. Duh. So then you see the price dip, and then of course when it goes down, other people go, uh-oh, it's going down, I'm going to sell it too. So that's the mass psychology. So you can very clearly see, if you don't do any other kind of chart analysis other than simple support and resistance lines, then charts do matter to me. But for example, right here you can see, again, simple support and resistance. You can see that very clear $26 area that which we've been talking about has been, which was previous key support, which just happened to line up with that big Fibonacci level around that $25.75, $26 level. And also, I may not have this drawn in perfectly, so it could line up perfectly with 26. Probably does. And so you can see it respects it greatly. And also, chart analysis, it broke out of this symmetrical triangle pattern right here, and then it has pumped. Now, I have been saying, and it doesn't happen every single time, but I have been saying, once you do pump out of an area, you tend to revisit it. Now, does that happen every time? No, but a lot of the time you do. So that's why we've been talking about this area right here. Will it do it this time? I have no idea. But until it holds above that $31 on a monthly time frame, then I'm going to say that that is still in play for me. And as I've been talking about for the since I think I started this show 7 weeks ago, $31 for me right here is that key level that I want to see it hold on the monthly time frame. So look, it's great to see that we are back above it, but could this be a spike and then we close below? Yeah, absolutely. But it is great to see that we're in a green month so far after that low. So anyway, I'm just talking about, that's just some technical analysis here. But the short answer is yes. Personally, I find the charting to be important to keep an eye on. Is it 100% predictive? No. Why? Because black swan events occur. But out of interest, do take a look at this. Down here, on the monthly timeframes, on the longer term timeframes, charts matter more, in my opinion. On the longer term, on the monthlies, on the quarterlies, on the yearlies, they do matter more than your little interim. Why do we worry about the 4-hour chart and all that? Well, because I do a daily show. So I'm going to talk about the prices every single day. If I was to do a live show once a month, I'd just be talking about looking at the monthly chart. Because I do a daily show, of which you all love, and hit the big red subscribe button, that's why I talk about the daily prices. And here we've gone here, the weather report on the 4-hourly time frame, this Fibonacci and all that. Really, the charts matter more on the long-term time frame, which everyone would agree. But out of interest, look at this. Even so, here's a black swan event right there. Again, we all knew what happened in March of 2020. Panic, panic, panic. And we saw on a monthly time frame, this is a monthly candle right here. Look at this. It had been around about this support level of that $14 level right there. And for that month of March of 2020, and even it was just a few days within that month, we saw that big spike all the way back down to that $11.70 mark right there. But what happened? It quickly came back up, and what do you know, found its close around about, this Fibonacci level, which happened to be an old support level of that $13.70, $14 mark. So yes, black swan events do occur, but out of interest, on the longer term timeframes on the chart, it's still closed around a key technical area. If you want to call that the support level, if you want to call that a Fibonacci level, I don't really care, but that's what it did. And that's why, personally, charts do matter to me. And they matter to me in terms of future prices as well. Now, why do they matter to me? Again, because of the market psychology. If enough people believe, and it doesn't really matter whether you think charts matter or whether you think charts don't matter. It doesn't matter about you. It matters about the collective. If enough people believe that charts are roughly kind of predictive-ish, then they will place their trades accordingly, which then it becomes a self-fulfilling prophecy, which takes the prices to those general levels. As an example, and I'm not saying this is going to be the levels, but, and I'll pop this on the quarterly maybe, just so you can see a little bit more defined right there. If, for example, enough people believed that this old high of Fibonacci and this old low is still in play, I personally think it is, because we're in a giant cup and handle, and until this handle is broken and we see some peaks, I think this these Fibonacci extensions are still in place for both gold, silver, platinum as well. I think they're all in place until they make new big all-time highs. They're still in play. But that's just my opinion. But if enough people believe that, say, for example, the 1.618 Fibonacci level from this old high and this old low could be a key area of resistance, not the big pump, but if enough people believe, and I believe they do, that they think would be a key area of resistance after making new all-time highs, then they will place trades accordingly. Now, who are they? They could be just your big whale investors. They could be the market manipulating the market. Could be the same thing. Does it really matter? No. Can we prove it either way? No. But if enough people believe that $75.50 which is the 1.618 from this old high and this old low, which has seemed to be predictive with Fibonacci over time, over decades, then people will place their trades accordingly, and that will take the price there. And you might see, a little resistance point on a monthly time frame potentially. However, if also people go, well, look, over time, looking at history, the 1.618 or the 2.618 or even the 4.236 are key Fibonacci levels, and I think they'll go to at least one of those. They might place their trades accordingly, and you may see, and I think you will see, after we make new all-time highs, my personal opinion, that these levels will be respected in some way. So I think you will find maybe a bit of resistance here at 75. You might find major resistance at 120, or it may not even come till 192 US dollars. But at some point, I feel that the big peaks in the next silver bull run will align roughly around, maybe not exactly, but spike above, but close around these Fibonacci levels. That's for me because I've seen it in the past with other charts. I think it's reliable. So, do charts matter? Is the question. Do charts matter? Get your final comments in below, and we're going to get out of here. Do charts matter? Yes, to me. Is it subjective? Yes, it is. On the larger time frame, particularly let's talk about precious metals. Should you be worrying about it, and does it matter in terms of whether you buy now or buy later and wait for the perfect dip or wait for this confirmation for it to go over 2,400 US dollars for gold? No. So, do charts matter when you're buying? No, not really. Should you be dollar cost averaging? Yes. Do charts matter for me in terms of looking at the predictive nature of them? Yes. Do they matter for me when trying to predict potential highs later on when we break new all-time highs, which we will eventually? Yes, it does matter to me. Now, if you're the type of person that agrees with that, then you'll join this GMS family and we can go on the ride together. If you don't care, then that's okay too. And you can still join the GMS family and go on the ride together, because I'm in both camps. Dollar cost average is the absolute best way to go. Don't worry about the prices, but I think it's interesting to keep an eye on, because the charts, once again, are a map of mass psychology, in my humble opinion. So that's my answer. Subjective, buy whenever you think is right for you, but I think for me, charts do matter in some kind of sense. So, do charts really matter? That is your answer. Let's do some last comments and then we'll get the hell out of here. You got stuff to do and I've got stuff to do. Here we go. Oh, we've got some great shout outs as well. So David Williams did say you'll never see a black swan event on a chart. Yeah, you'll never see it coming. That's correct. You won't. But out of interest, David, what we did see is we saw it respect that level of March of 2020. Respected that support level, or that Fibonacci level. I find that very, very interesting. So you'll never see it coming. And here's the thing about black swan events: you won't see it coming, and therefore you very likely. I mean, you likely won't be awake at the time that it happens. You could be asleep when you see those black swan events happen quickly. Now, with the March of 2020 thing, there was a few days. So that was good, but here's what happens very interestingly. Let's say you saw it go below that $14 level. You're like, oh, the black swan event, something's happening. It's a big panic. Oh man, it's going down $13. Oh my God, it's $12. What happens during a black swan event is a panic. Usually a black swan event, something you can't see, and it usually involves some kind of big thing, a panic, something like that. So can you be confident at the time that when a black swan event does occur again, and it goes, let's say the prices go down, will you buy at that time? I don't know, because these things do happen quite quickly as well. And at the time, what are you feeling? Is it panic? Are you going, oh, everyone's panicking. Oh no, everyone's getting out. Oh no, I think it's going to go down even more. I think I better wait. That's why you don't wait for the right prices and all that stuff. You just dollar cost average. But do keep that in the back of your mind as well. Yes, you'll never see a black swan event coming on a chart. And you probably won't catch it in the beginning. And that's both on the downward side and on the upward side. You won't catch the very top as well. But I do find charts do matter to me for a general mass psychology. You'll never pick the top, you'll never pick the bottom, but you can see the general direction that something's going in. It's all psychology. Wall Street Silver, love that you're on the channel. We often see animal outlines on the charts. We think they're sending messages to apes. They are the apes. And we love all our apes out there, our Aussie apes in particular here in Australia. David Williams says, and this is a great point, it's not like you are into physical, it's easy to switch in and out on a whim. It's not like if you are into physical, it's easy to switch in and out of on a whim anyway. Exactly right. You're buying the physical metal. So it's not easy. You could be, the Black Swan event happens and prices go down, prices go up. But, what if that happens, on a weekend mainly, and you have to wait until Monday and the bullion deal is opening and exactly. And you don't want to be trading in and out of that anyway. You are holding for the long term. So I agree. But charts do matter to me for those reasons. Chris Phipps says, hello from Portland, Oregon. Wow. Number one, congratulations. Welcome. Number two, I'm going to make a guess, and I'm going to hopefully not be offensive. Just because, so here's what I think. Chris, and you can post a comment below and let me know your thoughts on this. Chris, you are a precious metal stacker. You must be if you're on this channel. So that tends to lean you in a certain direction, if you know what I mean. But you're from Portland, Oregon, which my understanding kind of tends to lean in the other direction, particularly in Portland. You know where I'm going with that politically. So what is it like for you to live in... This is a question for you, Chris, and hopefully I'll get your comment before we go. Tell me, what is it like to live in Portland, Oregon at the moment, at this very moment in time, where we are within the world, where we are with the current leadership in the United States? What is it like? Have you seen any kind of shift recently? I kind of feel like living in Portland, Oregon, they're going to be like dyed in the wool. Will never change my mind. Nothing's, this leadership is great, blah, blah, blah. I'd really like to know your perspective right now. Quickly type something out for me. What's it like to live in Portland, Oregon right now? Because I kind of feel like you lean in lean in that direction when most of Portland, Oregon is in that direction. Tell me what it's like to live in Portland, Oregon at the moment. Not in terms of the weather, but in terms of the feel, the vibe there right now, because that'd be very interesting to know. G'day, Chris. Yep, it's great to see new people. Only 5 more subs to hit 300. We'll have a bit of a 300 party maybe as well, a mini party. Hit the big red subscribe button, Chris, and everyone else watching live. Tony Peterson says, please don't forget to hit the thumbs up. It helps with the YouTube algorithm. Hazza, it's the first thing he does before watching, and I appreciate that. Good on you. And of course, you should say this, Wall Street Silver. Silver equals moon. Silver to the moon. The black swan is named Luna. Oh, are you making the connection between the lunar cycles there, Wall Street Silver? A lot of people think so. Now, Laurie Williams says, no, charts don't matter. They don't matter in general if you're just buying and holding for your next generation as well, if you're passing it down. But Black Coal says, charts matter to me to help buy the dips. And I agree with that too. 6 of one, half a dozen of the other. Keep on stacking is the way to do it. David Williams says, picking dips is a fool's game. Yeah, look, I tend to agree with that on the longer term timeframes. Yeah, don't try and pick the dips and never try and pick the tops. Yeah, I agree. Picking the dips is a fool's game. Don't try and pick the dips. Don't try and pick the tops. But if the stars align for you and, you happen to have some quick cash, watching the charts is still a good idea. In my humble opinion, that's why I do it. Because what happens if you have a spare bit of cash and then the price is just down to a certain level and you go, oh, that's at a very key support level. Oh, I think I was going to wait until blah, blah, I'll just buy it now. Okay, but look, dollar cost average is your best way to go. 19 watching and only 1 like. How dare they? Premiums often spike during events too. Yes, so during a Black Swan event, I don't think the premiums didn't spike a lot during the March of 2020 event, because I worked at a bullion dealer at the time. The premiums did go up a bit, but you have to, and you know the reasons why. You're not asking the reasons why the premiums go up, and you're not complaining about it, so I understand that. But out of interest, for anyone saying, oh, it's so annoying when the price has a big dip, the premiums go up. Yeah, they have to, because then you've got to balance supply and demand. Let's just say premiums were where they were in February of 2020, a Black Swan event, which pushes the price right down. If premiums had have stayed at that February 2020 level, then the supply of silver from bullion dealers would have disappeared like that. So that's why bullion dealers, to keep everyone happy, to spread the love, they have to, and it's not a greedy thing. It's so that companies can raise their prices so a little bit, so it sort of evens out the demand for it. So people go, oh, it's a little bit high now, I won't buy as much. I only had $1,000 to spend, I can't buy as much. So that it kind of spreads the love, and it keeps the precious metals in stock in the bullion dealers, because the last thing any business wants to do, particularly a bullion dealer, is have a day where there's nothing to buy, because that just alienates everyone. So that's why premiums do raise. You weren't asking that question, but I'm answering that question. So Chris Phipps says, I've definitely changed my lean from the north, south, east. There we go. I've definitely, and this is backwards. I know what you're saying here. I've definitely changed my lean. This is very interesting, Chris. From the west, I have to do west because you're looking at it on this way. From the west to the east. From the left to the right over the past couple of years. That's amazing. Chris, I'd like to know, and we'll get to the end of the show, but I'd like to know if you can post, is that because you started stacking silver and then that happened to occur, or was that occurring and then you got into stacking precious metals? For me personally, and I think a lot of people happens this way, I started stacking precious metals just like investing. Again, was told the story many, many times. 2010, I had a spare $5,000 I wanted to invest in something. Didn't know, it could have been stocks, could have been anything. And then just precious metals and silver started coming up on my YouTube feed, and I went down the rabbit hole. And I was politically leaning. I was just whatever. I was kind of like an agnostic. And then you start stacking precious metals, and you start going down the rabbit hole, and then all of a sudden, you start going in a further direction. So is that similar to you? Was it the stacking that was the catalyst, do you think, for you starting to lean in that direction? And I was thinking, you from Portland, Oregon, you may have been brought up in a household that was, a bit more leaning the other way. No, but that's a deep thought. Don't know what that was for, but it was for something else. Deep thought about lunar cycles. Hoarding silver will help us build a future ape kingdom. Yeah, out in the outback somewhere. But premiums seem to not go back down. Premiums have gone down. They do seem to go back down, but what happens is you tend to have a raise in premiums, and then, because don't forget, it's still following demand a lot. So then it sort of plateaus at higher, but goes down, but it plateaus a little bit higher. Chris says, we've got to get out of here, people, but we'll read these comments. We have several good coin shops in Portland, in Portlandia, and close by, so there must be other stackers nearby. I met Silver Dragons. Cool. At Harry's Coin Shop. You met Silver Dragon. Cool. Nice. Silver Apes are Bonanza Kangs. Nice. And Tony Pearson says, Silver Apes strong together. People, I'm going to end it here. So thanks for watching. I will look out for Chris's last comment. Maybe we get to it. Maybe we don't. But what Chris can do is he can join us next week at around about this same time for the next live show, and we can read out that comment. Or you can post a comment on the video replay. So rather in the live replay, Chris, you can post it in the actual YouTube comments, if that makes sense, after the live show is done. But I'd like to thank you all for watching. Good morning, Stackers! Again, your weekdaily live show. My name is Joe Main. Get your tasty beverages. We do the last synchronized slurp. We talked about silver pumping. We've talked about those levels. We asked the question, do charts even really matter? They matter to me in a certain way. Should they matter to you? I don't know. That's up to you. And it's completely subjective. Should you just be by dollar cost averaging anyway? Yes. Don't try and buy the dips. Don't watch the charts to buy the dips, but watch the charts, in my opinion, for the mass psychology on the longer term timeframes. And you'll get your little daily interim levels as well, because it's the fun weather report for me to do. That is it, funky people. Let's do the synchronized slurp in 3, 2. Finally, he says... he got it in. I started stacking in 2020 during the lockdown and spent a lot of time on stackers channels that led to other channels. Yes, you went down the rabbit hole, which took you from west, north, south, east. Yes, from east to west. I think that was from in one direction to another direction. Yeah, from the west, you were north, south, west, east, west. Yeah. Anyway. I think I know what you're saying. So, fantastic. And Wall Street Civer says, sip. One last one. That is it, funky people. Love your work. Stay safe. Stay informed. Keep stacking. Watch those charts. And I'll see you next week. Have a great weekend. Enjoy it. See you Monday.